Welcome again, number 5, our webinar number 5. We're live today with Mary-Claude Blanchette, who works with us as our financial planner dedicated to our clients. I just want to put a little promotion in here. We do have our YouTube page running. The videos are slowly being uploaded. We're having a little bit of a technical issue right now, but as soon as they're all uploaded on there, I'll make sure to let you guys all know. And again, contact information as per usual, 905-849-3549, and my email is sheehan.patel@nbc.ca. So a little bit about Patel Wealth Management Group. It's a business that was started in 1981 by my father, Sheikh Patel. He was a stockbroker back then, and as everyone knows, that whole industry has really progressed into this wealth management beast that it is today. We don't just do investments, we do everything that has a dollar sign except for accounting. A little bit about myself. I'm the associate investment advisor on the team, and my job is pretty much to, do some of the facilitation, build the team, coordinate everyone, and try to help grow our clients and make them more wealthy. So let's get into the webinar here. I'm gonna pass it over to Mary-Claude, and she can tell everyone a little bit about herself. Mary-Claude?
Good morning, Sheehan, and thank you so much for inviting me to join you this morning. This is a wonderful way to spend half an hour and to introduce your clients to financial planning. I've had the pleasure and the privilege of being a financial planner for close to 30 years now, and for me, it's been as I said, a pleasure and a privilege to be able to help clients along the way in achieving their financial goals and ultimately in many ways achieving their life goals, because obviously the finances need to be there to support your financial goals. And it's been a wonderful journey for me personally and professionally. As I said, I've been doing this for close to 30 years, so I've been around the industry when it was there in its infancy and where it is today, and it really has changed tremendously. It certainly is a much more formalized profession, more so than maybe it was 30 years ago, and a lot more recognized and organized, and really formalized in a way where a lot of us have to follow some very strict rules in order to make sure we're protecting the public, and we'll talk about that a little bit as well too this morning.
Mary-Claude, you're a CFP, right? Do you want to just tell everyone about that?
Correct. Yes, I've been a CFP for many, many decades now. I've worked in a number of different industries. I've worked as a financial planner in many different environments. I've worked at places like MD Management. I've worked in another bank environment. I've worked with niche organizations where we dealt with primarily executives, or as I mentioned, physicians. And I've been here at National Bank over 9 years now, and have had the pleasure of working with many of your clients, and look forward to working with more of your clients as well too. CFP designation, as you wanted me to allude to a little bit more, is really sort of the recognized gold standard now in the industry. And really, if you want to meet with a financial planner who is accredited, who has the experience, who is maintaining a certain level of standards that's going to help you achieve your goals, then you really want to be meeting with somebody who is a CFP at the very least, because that designation today really means something.
Yeah, thank you, Mary-Claude. We've been working with Mary-Claude for, I guess, over about 5 years now. And again, I wanted to really just tell everyone, CFP, if you don't have it, you shouldn't be doing financial plans. So that's why we have Mary-Claude on our team. So why don't we jump into the first question here. What is financial planning?
Financial planning, it's one of those very elusive terms. It can mean so many different things for so many different people. But simply put, I would say it's probably a comprehensive review and analysis of an individual's current and future financial situation. So in the process of financial planning, we will look at the client's current income, their current expenses, their assets, their liabilities. We talk about their goals, their objectives, their issues, their concerns, and then we help them put together a roadmap. And that roadmap then becomes something that we implement so that those goals and objectives are ultimately achieved. And it's something that becomes something that you can go back to on an annual basis when you sit down with your clients to do the performance review on their portfolio and say, you know what, we had a conversation about we were going to save this much, and we're going to be on this target with respect to our assets. Where are we versus the plan? And making sure on a regular basis that you're achieving those. And part of financial planning is also looking at mitigating risk. A lot of people think of, okay, I want to save for retirement, I want to save for my children's education, but what they don't look at is the what ifs. I always say to clients, financial planning is about hoping for the best and planning for the worst. And the planning for the worst is really looking at what could potentially happen if someone were to pass away prematurely or become disabled. And those are really, really important things to look at, because we can be on target to plan, but if something happens to one of the individuals in the couple or the individual itself, if it's a single person, that can really derail a plan. And I think people need to really be mindful when they're looking at financial planning as a whole, as a comprehensive process, that we also look at mitigating risk. And that's really, really important as part of the process, for sure.
Yeah, thank you. When we actually do our financial planning, we are looking at it annually. And you know, when we do the investment portion, we want to make sure we're still, you know, achieving those goals that you want, just like Mary Claude said. Sometimes those meetings are done with Mary Claude, and sometimes they're done just with Schick and I and yourself. And it's funny, we don't always just.
Sorry, Shane, if I can just add in here too. Yeah. And I think you've hit the nail on the head. A lot of people tend to think financial planning is one of those things where you get the report, you put it in a drawer, you never look at it again. And that couldn't be further from the truth, because it really is a dynamic process. And part of what makes it dynamic, obviously, are the changing economic conditions, changing market conditions, changing personal situations as well, too. So, you know, as you pointed out, it becomes part of the annual process, and it has to be a very dynamic, live process where you can adjust, you know, turning on a dime, so to speak, to be able to reflect what's happening in the world in many cases.
Yeah, no, for sure. And again, we don't know what's going to happen in a year from now or even a couple days from now. So that's why it's so important to keep on doing this. So I mean, we just started touching on it. Why is, you know, financial planning so important for people to do, especially if you're not a complex situation, or even if you're a simple situation? Why was it important to do?
I think financial planning is really important to do for everyone, to be honest with you. It's important because we all have these goals and objectives, you know, swimming around in our heads, and you think, oh, I would like to be able to pay for my child's post-secondary education, or I want to be able to retire at 55 or retire at 60. And they're goals that we're just thinking about. But until you commit them to paper, until you sit down and actually strategize how you're going to get to those goals, they're really just swimming around in your head, and they're really not going to become potentially concrete objectives that you will actually achieve. So, you know, if you don't know the old adage, if you don't know where you're going, any road will take you there. That is so true about financial planning. So, you know, financial planning helps you take you down the right road that you want to get to ultimately. You know, if you're planning a trip to go down to Florida, but you don't have a roadmap, you may end up in California. So that's why I think it's really important. And people, you know, I joke about the fact that people probably spend more time planning their vacations annually than they actually do planning for those vacations. And that's the process of financial planning. And so you might spend, say, 10 hours planning a trip with your family, but you really should spend at least that much time planning not just that trip, but the next 20 trips you're going to be taking throughout your life.
Yeah, no, to add on to that, you know, why is it so important? You don't even have to be like older or close to retirement to be financial planning. We do financial plans for millennial clients, and you know what they say is we want to buy a house. So how do we get from, where we are today to the next 5 years and getting that first house? So, I mean, it's for everyone. It's not just, people that are edging closer to retirement.
Absolutely, absolutely. In my mind, I think everybody should be doing a financial plan. But to your point, the beauty of financial planning is it's adaptable to the client's particular needs and what their particular issues and concerns are and what their goals and objectives are. So the needs of a millennial are going to be very different than those of somebody who's 5 years away from retirement, for example. And my job as a financial planner is to make sure that we're addressing what their particular needs are. And sometimes it's going to be done in a comprehensive format where we're going to be looking at every aspect, but sometimes we're going to be doing it in more of a modular fashion. Maybe in one meeting, we're going to be addressing, how much you need to save for retirement. So we're setting some small targets for a millennial, whereas the planning we would do for somebody who's 5 years away from retirement would be much more comprehensive, possibly more robust, and we'd be setting maybe some, more concrete targets and saying, you really need to abide by this if 5 years is really your target from now. So, we adapt it based on whatever the client's particular needs are. It's highly customized and really tailored to their specific goals and objectives and their particular stage in life as well, too.
Yeah, I guess financial planning doesn't really end when you become 65 and retired or whenever you're retiring. That process goes on forever. You start taking income out, and then one of our other webinars we talk about income planning, and yeah, it's an ever-going process. Now, I want to jump into a quick question here because I know that a lot of our clients, some of the bigger ones at least, may have corporations or whatever, and they always say, my accountant has done my kind of financial plan for me. Let's just address what the differences could be between like you doing it and say an accountant doing it. I'm not saying that either one is bad, but let's just address so people know.
Yeah, that's a fantastic question. And I actually get that fairly regularly because to your point, a lot of people will say, oh, my account's already done some financial planning for me, or they've done some planning for me without really thinking about what was actually done. Accountants are a wonderful ally and support in the work that I do as a financial planner. And I often call on them to provide me with some of the information that I need to process the client's analysis. So case in point, if a client, a lot of times business owners are so focused on their business that they really lose track of what they need to accomplish for themselves on a personal note. So what I help them understand is the work that your accountant has done in terms of your business and maybe integrating your personal tax situation with that of the business. I'm going to take that information and I'm going to translate it in such a way that you can understand how the fruits of your labor, your business that you've grown over years and years, is not going to become the powerhouse for your long-term personal retirement goals. So that's what I help them understand, how we're going to take that business, whether you're going to have somebody run it for you, whether you're going to sell the business, whether you're going to transition to the next generation and now your kids are going to start running the business. Regardless of how you decide to manage that asset, we're going to take what you've grown and turn that into here's how that's going to help you achieve your own personal long-term goals. So the accountant is a really strong ally and somebody we rely on tremendously to provide us with the information that we need to help the client understand how their business becomes a personal asset. But an accountant may not have taken it to the next level. They may not be looking at how to mitigate risk in the event of a premature death or a disability. They may not be looking at educational needs for the children or the grandchildren, and they probably aren't doing any estate planning with them as well too. So that is part of the financial planning process. So obviously something that we generally maybe encounter more with older clients or those certainly nearing retirement. We'll do a lot of estate analysis with them. And that's something that generally speaking, accounts are not going to go down that road. Accounts are really going to be focusing on the tax planning for both the business and the individual as well too, without taking a necessarily broader approach.
Yeah, no, I think that's really a lot of really great points there. When we talk to our clients, we always say we want to spend at least 1 hour a year with your client and with you and your accountant, so that we can actually tax plan and investment plan and financial plan all at the same time. Because you know what happens? A message goes to you from your accountant and then it's relayed to me, and we're playing telephone already. It's not the same message.
Exactly. And what you don't want is for people to be working in silos. So, the accountant's going to be working in the tax silo. You will primarily work in the investment silo. And part of my process is to help you see the bigger picture and to help you manage all of the different buckets that really comprise a client's financial life.
Yeah, thank you. That was a great answer.
You're welcome.
So when it comes to financial planning too, I guess let's just talk about, you kind of already touched on it a few times, but like, what are some of the biggest risks of not doing it? Say you're a person, you're like, oh, I'm good. I have RSPs, I got real estate, I got all of this stuff and all over the place. And what's the risk of not doing a financial plan?
Pure and simple, you won't hit your target. Or you don't know if you're going to hit your target. You don't know how far you're going to hit your target. It's kind of like saying, I'm going to throw a dart and I don't really care where it lands. I don't care if it hits the bullseye. I don't care if I'm in left field at the end of the day. That's basically what you're doing. You're saying, if I don't do a financial plan, I'm saving $100 a month into my RSP, $100 into my TFSA, and say another $100 into my child's RESP, but we don't know what we're going to achieve at the end of the day. We have no target. We're really not aiming for anything specific. So at the end of the day, we're not quite sure what could potentially happen, and we're not quite sure where we're ultimately going to land. So that's probably the biggest risk of not doing financial planning. We want to make sure that all the hard work you're doing of savings is actually going to hit that target that you intend to hit. And of course, the other aspect of it, and to your point, I kind of alluded to it a little bit, the risk management. You want to make sure that if you're doing all the work today to save and to achieve your long-term goals, if something were to happen and we end up derailing because of a premature death or a disability, we want to make sure that we've mitigated that risk as much as possible. And that does mean putting in place things like life insurance, disability insurance, maybe critical illness, looking at those potentials, the what ifs of our lives, basically.
Yeah, no, it is important to take a look at it, because as you said, plan for the best, or hope for the best and plan for the worst.
Exactly. That should be the one takeaway that people get from this particular video, is at the end of the day, financial planning is about hoping for the best and planning for the worst. So let's make sure that we do the planning so that we achieve the hopes that we have, and then ultimately also plan worst case scenario, the what ifs.
Yeah. I guess that I just want to kind of let everyone know there is a question and answer button like around there. You can click it and ask questions right now, and I can ask Mary Claude along the way. I want to also ask you a question that maybe I didn't ask you prior to this webinar, but we take into account, when we do financial planning, do we take into account all assets like real estate, everything? Do we look at all of that, or are we just doing, just the investments that we have under management type of thing?
No, we look at everything. We look at absolutely everything. Some clients have real estate, excuse me, some clients have real estate that they use as income properties, with the intention that that becomes part of their income in retirement. So maybe during their career, they're funding this, paying off the mortgage, and then come retirement, that becomes a real estate asset. It becomes like a little pension plan, in that they're getting regular income from that asset. Some people, especially a lot of people in Toronto, say, you know what, we have a big house, we had 3 kids, when we get to 65, 70, we really don't see ourselves being in this big home. We want more flexibility. We want to be able to lock the door walk out of here, go on a trip for 6 months and not worry about the grass or the snow or any of that. So we often take into consideration their primary residence as part of the planning process. But again, that comes back to making sure that we have a really clear understanding of what the client's goals and objectives are and what they are instructing us to take into consideration when we're doing that kind of planning. Some people view their home as maybe part of the final legacy that they're going to leave to their kids. So what the conversation we'll have in our first meeting, in the discovery meeting, is, you know what, I'm willing to spend every single penny we have in terms of our investable assets. And at the end of the day, I want to make sure that the value of our home is what we're leaving to the children as our legacy at the end of the day. So we do include absolutely all the assets that the clients have, and we will have that conversation in our discovery meeting. What do you see is the appropriate use for that particular asset, both now and in the future? And things like cottages, for example, another legacy point. A lot of people say, you know what, we want to make sure that at the end of the day, we're leaving the cottage to the children, because the grandchildren are now starting to come to the cottage as well too, and they love it. And we want that to become a family cottage, a meeting point for everybody in the family. And so the planning needs to happen to make sure that there's either going to be liquidity at their life expectancy in order to pay for the taxes on the cottage, or we ensure that there's going to be liquidity potentially through some life insurance products as an option as well too. So we look at all of those aspects as part of the planning process.
All right. Yeah, so we actually got a question here on the line. I kind of know how to answer this one, but I'm going to let you answer because you're the expert. So what are some typical goals that are considered when financial planning? And this is a very open, broad-based question. I feel like a lot of people don't have the same goals, but anyways, I'll let you answer it.
You're absolutely correct, and that it's very, very individualized. My goals are different from your goals, are different from the 700 clients that I've met with since I've been at National Bank. And, you know, everybody, and that's part of what I love about financial planning, even though there are some common elements. Obviously, most people have RRSPs and they save for retirement. What's exciting is that every single meeting is slightly different. Everybody has different goals and objectives. Everybody has different concerns and issues. But some of the typical ones are, you know, I'd like to retire by the time I'm 55, 60, 65. I have 2 children, and my hope is that I'll be able to provide some support to them during their post-secondary education. So we do some planning around that and take advantage of obviously government grants and so on with the RESPs. And then some of them are, you know, I want to make sure that if something were to happen to me, I would want to make sure that my family was okay. So let's take a look at some survivor needs analysis. And of course, there's always the estate planning. A lot of people have goals that are around, you know, I'd like to leave X amount to my children. I'd like to leave X amount to my grandchildren. How can I? And charities, absolutely. Very good point. Go ahead, add some, Sheena. It sounds like you've got some great ones there that you want to add as well. Go ahead.
No, I mean, I think a lot of people want to give to charity, right? Like it's an important thing. It's part of people's, what they think about it. Oh, I have this much in wealth. And I think it's a good idea for me to, you know, give some of it to, and then what are the proper ways to do that? And I don't think people know exactly how to do that. Sometimes people will say, oh, I'll give a third, and then they realize a third is a lot of money. So you address those type of things, right?
Exactly. And that's often best done in terms of the estate planning as well too, or even during lifetime, because there are really tax efficient ways of being able to make gifts both during the your lifetime, as well as in terms of as part of your estate to mitigate those final estate taxes that everybody has to face.
Yeah. Okay. I guess we're kind of like, we're almost running out of time here. So I want to just ask one more question, 2 more questions actually. How about, so people on the line know the caliber of what you've done for people. What's the largest financial plan you've ever done? And then say, what's the smallest financial plan you've ever done?
The largest financial plan I've ever done was for a client who had a net worth of $35 million.
Wow.
It's pretty substantial for sure. That comprised of a number of businesses that they owned, that they had grown over a couple of decades. And they had also done a really good job of, being able to set aside some personal investable assets as well for themselves. So it was a lovely planning opportunity because the individual had done a great job of extracting enough out of the business over their lifetime to be able to fund their own retirement. And then the planning for the businesses, because it was going to be, a transition to the next generation, we were able to position that in such a way that it was a tax efficient and really minimize costs to the next generation in terms of buying into the business. And then probably the smallest one would say was probably about $100,000.
Yeah, and see, that just goes to show everyone needs them.
Yeah. We all start somewhere, right?
Exactly. So for everyone on the line, I do want to just kind of note that, working with us in the Patel Wealth Management Group, you do get to use someone like Mary Claude. We don't charge you for her services. It's actually something we offer to all of our clients. And I think it's very important. Sometimes these plans you can go out there and get done by an independent person can cost you thousands of dollars. By coming to a team like ours, we actually have everything in-house and it makes it easier for you. And again, we work with your accountants, we work with everything. We want to make sure everything's all in the same place, and it's more like, it's a much more easier process for yourself. So on that note, I don't think there's any more questions out there. Did you have anything else you wanted to add, Mary Claude?
No, I think this is a good opportunity for your clients who are watching and any maybe potential clients to recognize that you and Chic have a really integrated wealth management approach that is, not so common. And I think people need to really appreciate that this is something unique and that they really need to avail of your services from that perspective, for sure.
Thanks, Mary Claude. So again, everyone on the line, if you want our contact information, it's going to be in the video underneath. But again, 905-849-3549 and sheehan.patel@nbc.ca. Shik's information will be below as well. And we look forward to helping you out as soon as possible. Thank you, everyone, and have a great afternoon. See ya.
Bye.